Hey, what's up, Chad? What's up, YouTube? What's up, X? How is everybody doing? Happy Thanksgiving Eve. I'm surprised you young guys aren't out at the club, or not really the club, but this is a great night to go to your local pub, maybe. This is the kind of night going to the pub is made for. Going to the ice house or whatever you have in your neck of the woods. Jackson, what's going on? Come here. Who wants a treat? Who wants a treat? You want a treat, Jackson? Jackson, I thought I left it in the car. Never mind, Jackson. Never mind. Just go be good. I should have said that. All right. Yeah. If anybody's around, I just didn't figure there'd be many people around because it's, because of the holidays and stuff. But I just have a quick one tonight. We're going to do the daily factor, and we're going to talk about precious metals, gold and silver, high yield surrogates. Jackson, come here. You want to see everybody? Come, Jackson, come here. I got a treat over here. Look how pretty this dog is. He is so good. He is such a good dog. All right, Jackson, just chill out. Just chill out. Going to the club garage. So you watch me in the garage. I got a comment that I need to get a new microphone, and I'm sure I do, but I haven't got complaints about my microphone in a long time. I think maybe the night that I wasn't feeling good, and I was sitting back here one night and talking quietly. But I think if I speak up, I think this microphone works fine. But I would love to get a little remote microphone that I could clip onto my. I'll get one of those. I'll buy myself one of those for Christmas. Hey, Biker Man, what's up? Gold and silver, yeah. Interested in how the covered call funds compare and how the options work for K Gold and K Silver. Okay, well. Got good news and bad news. The good news is we're going to be looking at K Gold, but K Silver doesn't have enough data for us to look at. I have to have 3 months of data to base the max factor on, but we're going to look at, we'll definitely look at gold. And I just put K Silver's on the max factors. It's going to be on the max factor. Let's see, December 30th. It turns 3 months old on December 30th. I think it came out September 30th. So 10, 11. Yeah. So anyway, but it'll be there. It'll be there in the new year. I need to figure out a way to put funds that have only been on for a week or two on there. I could probably figure out how to do that. I could. Maybe that's an improvement I need to make to the max factor so these funds can go on instantly. Anyway, all right. Well, let's get this show on the road. Depends on how technical you want to be. You do have an echo, but I'm not an ASMR kind of guy. Okay, well, so check this out. So audio. So let's see. Microphone. Okay. If I ever forget and I'm on the USB camera, this one has a really bad echo, I think. And I've got complaints about this one before. And I listen to my own shows back, but whenever I put it on, I'm going to switch it to the other one. Whenever I put it on the just laptop one, it sounds a lot better to me of the two. So here's the laptop. This is the laptop one. In any event, but yeah, the one that comes with the camera, I do think is echoey. Maybe they're both echoey. It was way worse. I'm telling you. Okay, the laptop one isn't bad considering. I mean, yes, I need to get a new one. I need to get a new one. Yeah, I don't. And in fact, I have an external mic right here. Not a great one, but it is an external mic. And this one even sounds worse than the other two options I gave you. I don't know where the cord is, but yeah, this one sounds worse. I need to get a Rode, one of those ones that are RODE. I heard that's a good brand, and I want to get the kind that I just clip onto my collar. I think that'll be good because I do like to sit back. I think sometimes I sit back and I talk to you guys, and I'm back here when I'm tired and I start talking low, and then people can't hear me. So yeah, I'm gonna get one of the clips on. Hey, Kay the Gamer, what are your thoughts on Oh, did you ask me that yesterday? The other day, somebody asked me about TSYW, but I had to go, and I made an excuse to get out of it. But I don't think it was you, though. I think it was somebody else wanted to know about that. We'll talk about that. We'll talk about that, Kay. Remind me. Let me get this show done, and we will talk about that. Yeah, I know the Blue Yeti should be legit. I think it's fallen down one too many times or something. But yeah, the Blue Yeti should be fine. I mean, but that's only like a $30 microphone. No, the thing is, I don't have a Mac. I used to have several of them. This one's a PC. But the Mac microphone sounded terrible. When I had the Mac microphone, it was dog shit. So that's why I got this Blue Yeti. And yeah, and it improved the Mac microphone. But since I've started using the PC, I can't really tell the difference. If anything, I think it sounds a little bit better than the Blue Yeti. All right, so let's get this show on the road. But Kay, I want to answer that question or any other questions you guys have. Get them ready to go. Let me get this screen shared. So just for people that don't know what the Max Factor is, well, look, we have 5 people from Twitter and 14 people from YouTube. Anyway, the Max Factor is my own proprietary metric. I think that total return it's an all right metric, but it can be deceiving. The worst thing to do is look at these by yield. Yield's totally deceiving. You can't judge something that has a 50. You can't. Two things that have a 20% yield can be vastly different, and two things that have a 50% total return can be somewhat different also. So I made a way to look at the risk adjusted reward of these funds, and also I try to maximize for NAV stability in the Max Factor. It looks for relative NAV stability, so I think it's a good metric. All right, so that's like I say, it's my own metric, and we do this once a day, and then on the weekends we have the top 20 list. Hey, Clive's here. Clive, you were here this afternoon, and you're back right now. I appreciate it. All right, so let's get this show on the road. Where the heck is the Max Factor? All right, daily factor. So let's start over here. Let's start with the highest yielding first. Let's introduce our contestants. The highest yielder is Goldie, Gold Y, let's just say. Gold Y is from Defiance. This thing pays a 49% yield, and the NAV's not terrible. I mean, 90 days ago, the NAV was at 17. Today, it closed at 1669. I mean, that's actually really good. It's only down 2%. Now, of course, it's not really good considering gold's been in a huge bull market, but of course it pays a higher yield. The yield is a tax on the NAV. So that, you can almost always look at the ones that have the highest yield have the worst NAV, and the ones that have the lowest yield have the best NAV. It's just the way it works. But the Max Factor tries to identify the best quality of those two metrics. The highest quality, especially when you consider the risk that you're putting on the table. In any event, Silvo, I don't know whose fund Silvo is, but I really should know that. Who does Silvo? Is it no, it's UBS. Okay, and this is an ETN, exchange traded note, but whatever. 240 million assets under management. Okay. So that's UBS. I'll remember that for next time. Anyway, this thing, the NAV's great. I mean, it went from 85 to 95 in the past 90 days. That's awesome. That's a 23%, or that's an 11% quarterly NAV return. All right, the next one we have is iGold. I don't know who does iGold either. I should know these. I know the ones that do the high yield funds, Defiance, Round Hill, but these other ones, these companies that don't mess with high yields, I don't know really that much. Anyway, iGold is from FT Vest. Who the heck is FT Vest? First Trust. Oh, it's First Trust. Oh, yeah. These guys have the world's worst website. And these guys have one of the oldest covered call funds out there. They have an OG covered call fund. Anyway, all right. So that's First Trust. Well, these guys do a good job. No disrespect to First Trust. So that's iGold and making a 15% yield. The NAV is actually up a little bit from 21.69 to 25.46. It's up 17%. It's even up on a year-to-date basis. It's up from 22 to 25. All right, the next one is Gold-i. Who does Gold-i? This one's iShares, right? Now it's UBS. Okay. This is UBS. This one only has 136 million under management. Not a huge asset base, but pays a 14% yield. Next one we have is IAUI. Now I should know who that one is. That one is that one Global X or IAU? I think this one is Global X, right? Oh, no, it's NEOS. And the key is because it ends in an I. NEOS lots of times ends theirs in I's. I mean, yeah, like SP, SPY-I and, Triple QI and all right. Anyway, NEOS does a great job. Now this thing has about 200 million assets under management. All right. Well, NAV's gone from 49 to 55, just about 10% up in NAV. Okay, we'll take it. Next one's KGold. That is from our friends over at Curve, Mr. Howard Chan and his trader Dominique manage this, or Dominic. I don't know. It's probably Dominic. Dominique's the woman's version of the name. Dominic, I forget his last name. It's a French name. But anyway, he's the trader. 24 to 39. Or I'm sorry, 24 to 29. My bad. It's 21% up in NAV. And then we have YGold. And YGold, who's YGold? YGold is, maybe this one's iShares. I'm just saying iShares under simplify. Okay. Good looking chart. This thing only has 41 million, but it pays kind of a low yield compared to the other ones. So that might kind of explain it, right? All right. So those are our contestants. Let's sort it by volatility. This is equivalent to the VIX. If YGold had a VIX, it would be trading at 42. And, and so the SPY has a VIX and it's trading at like 19 or 17 right now, but usually it trades about 13 or 14. But anyway, so you can see this is much more volatile than something like the SPY. But like something like Gold-i is about as volatile as the SPY. It's trading at 11 volatility. We can also look at another way on the StableDex. The StableDex measures these in relation to the SPY. So Gold-i is a 1, meaning it's about as stable as the broader market. IAUI is the next most stable. Then Gold-y is pretty stable. iGold's fairly stable. Then it drops off. Silbo's only about half as stable as the broader market, as the SPY. And then we have KGold and YGold that are kind of the more on the more volatile side. All right, so let's just write it. So sustainability is the max factor. So number 1 is iGold. Now let's take a look. How did that happen? Well, I mean, it has a 15% yield, which is a better yield than any of these except for Gold-y. But Gold-y had negative NAV return. So I mean, this one has a 15% yield. Combine that with a 17% NAV return for the quarter. That's pretty good. And then you also have to consider the volatility. This is, iGold's less volatile than Silbo. I mean, so just it's all around. It makes the best pick, at least according to the Max Factor. But Silvo's good too. IAUI. I mean, it has a 12.5% yield, and it was up 10% on NAV for the quarter, and it's super stable. It's only a 15 vol. That's pretty good. Then we have Gold I next, making a 14% yield. It got rated a little bit lower because, I mean, it has the same yield as these, but it's making about half the NAV upside for whatever reason. Sure, it's super stable. It has the lowest volatility, but I mean, this is an example of something being too stable. Some funds have assets or have funds and they're super stable, and that's good, but they underperform. You don't want to be stable on the upside. In a bullish market, you want the most volatile. I mean, the high volatility helps you in a bullish market. But in any event, and then we have K Gold. K Gold is just, I mean, it has kind of low yield compared to these other ones. Sure, it does have good NAV return, but you can get basically the same NAV return out of iGold and get twice the yield, or 50% more yield. Anyway, then we have Y Gold. It only yields, it only yields 8, and it's super volatile. I mean, it does have good NAV return, but it only yields 8. And then we have Gold Y, which is fine, but I mean, it's the NAV's kind of hurting. All right. Well, hopefully you guys' favorite one made it there. Which one's it's way worse. Yeah. All right. Well, hopefully this one works better. Okay. So, what are my thoughts on TSYW? I really haven't checked it out that much yet. Let's just go check it out. And then we'll, I should have typed in prospectus. Oh, there it is. Roundhill. I mean, it's something's brand new. A lot of what you have to go off of is, do you like the other funds that this company manages? I mean, and Roundhill's a good company. And if you're happy with their other funds, you're probably happy with this. That's one factor, is the management. But the most important factor that everyone misses is what's the underlying. The underline on this is, let's look at the top holdings. Let's see what they're trading. iShares 20-year bond and total return swaps. Okay. I mean, you have to be bullish on bonds. Bonds generally do better when interest rates drop. So, I mean, if you think interest rates are going to drop, bonds might be pretty good, but this could be the best fund in the world. But if interest rates go up, this fund's going to lose money. All I'm saying is all that really matters in these funds, if you know nothing else, it's how much yield they pay and what the underlying is, or what's your opinion of the future of the underlying. But anyway, okay, so it's really too new, so it's making 12%. Let's is there anything? I'm wondering if there's anything we can compare this to. Roundhill Treasury bond. I mean, it's a weekly pay. It's Roundhill, so let's look at it compared to the TLT. It's really a bullish bet on this right here. And it's up because this is up. If this was down, the fund would be down. All right. Well, let's do this. It's really short time frame, but the other ones that I think you might like in this category would be TLTI, which is Neos. Neos also does a really good job. All right. TSYW is too new to even be in here, it looks like. Well, maybe not. Maybe not. I mean, it's just not enough. There's just not enough data to tell. I mean, not enough data to tell. Well, it depends on what you're looking for. Were you just looking for it? If you're looking for it because you're bullish on bonds, that, yeah, it might work. It might work. Yeah, Clive, absolutely. You're interested in the Canadian fund Big Y. It pays 31 cents every 2 weeks. I sure know the American fund Big Y is badass. I don't know anything about the Canadian fund Big Y. I don't know anything about that. In Canada, all U.S. funds have outperformed in the market. Oh, yes. I don't get that. You were trapped in mutual funds, but you always chose the U.S. market. So now, free a year ago, you were able to invest in some high yield ETFs. Oh, yeah. The Canadian market doesn't have weekly payers. I got you. Do any of you guys have TLTI or TSYW or anything? I mean, I just know that, it's too new to tell on that one. But anyone that's wanting to invest in that or any other fund based on bonds, just make sure you're bullish on bonds, because it's that, the fund managers don't, the option strategies and the fund managers and stuff, it has very little, it doesn't make near as big of a difference as what the actual underlying is as far as the outcome goes, in my opinion. All right, I'll look at Big Y for you. Big Y in Canada is right. Oh, it's Evolve. Yeah. I was looking at some Canadian funds today that I really liked, or I don't know, they're Canadian, they were EU. So that's European Union, but I bet it's a similar setup. It wasn't Evolve. I'll show you guys in a second, but I really like these ones I was looking at tonight. It was income shares. You can probably get those in Canada. I bet EU is, you can get the stuff in the EU probably in Canada also. All right. So we don't need this anymore, but this one is a U.S. equity ultra yield ETF. So what's it based on? I guess it's based on the SPY or the Qs or something. Let's put the SPY up over there. Yeah, and you can tell it's based on the SPY. It's the same thing, But the same thing goes for this one as goes for the last one. If you're bullish on the SPY, yeah, it'll work. But if the SPY goes down, it doesn't matter what it is. You can see here, this fund dropped. Is it really trading at $600? Oh, it's in different denominations. Okay. Anyway, so it dropped from 683 to hardly anything, like 5%. I guess that's about right. And that's about what the market was down from top to bottom. So have you guys heard of income shares? Yeah, and Harvest I've heard of Harvest. Okay, well, wait, I'll get back to Kay's question first. Flat NAV and over 10% yield. Well, you can't, it's only been out like a week. It's hard to, I guess you could say the NAV has been flat for sure. I'm with you on that. The NAV has been flat. Let's look at this. So it's been out 2 weeks, right? 12 days, actually. So like a week and a half or something, because some of those days were weekends. Yeah, 49 to 49. NAV's actually even up a little bit. Yeah. All I'm saying is the NAV won't be flat for long if bonds go down. It's bullish bet on bonds. But the other thing is bonds, should be good. Interest rates are supposed to be coming down. So you'll probably be all right in that one. Bonds usually go up as interest rates go down. Yeah, and it has a 12% yield. I saw that. So, the only one I might consider as an alternative is TLTI, just because I like NEOS and I think it pays a higher. Let's check out NEOS really quick. Then I'll get back to your question, Clive. I want to look at some more of these Canadian things. But yeah, TLTI. So let's compare with TLT, which is the underlying, and let's go back. Let's see how far back we can go. Boy, that looks, wow. Look at that. That's for a whole year, and it's just stuck with the underline. Boy, Neos does a good job. I mean, well, I mean, it's almost a full year. I'm just seeing here on this how good this Neos one is. It only paid about 5%. Or say it looks like, I mean, yeah, I agree. If that Round Hill's going to pay more, if the Round Hill's really going to say about 12%, since this Neos one only pays, it looks like a Neos one pays less. Yeah, maybe that would be a good one. I used to have TLTW, and because I bought it because I thought interest rates were going down, and I bought it to hedge some of to be more steady. TLTW spanking TLTI. Wow. Let's see if TLTW, what it does to the TLTs. But anyway, those are your choices. If you want this kind of fun, you have TSYW, TLTI, and TLTT. I think there's also one called TLTP, but I don't know anything about that one. All right, hang on. That's the wrong one. So I mean, that's a look at TLTW's beating the TLT, but the TLT's been down. That's an example. Interest rates went up in 2022 and bond prices crashed. And so, you can see if you'd invested in TSYW back then, you would have probably lost 20% of your money. And not that TSYW is not a good fund. It just is pretty much totally dependent on what the underlying does. But let's look at it for the past year. I'm just trying to give you some alternatives. It looks like TI doesn't pay enough. Let's see how TLT. Let's see what TLTW pays. You also probably chose it because it's a weekly payer, and TLTW is a monthly payer. So, but that's a good look for TLTW. Look, it's beating I mean, that's actually a pretty good looking fund right there. It pays, and look, it pays about a 12% dividend. I mean, I choose TLTW or the one you chose. And since TLTW pays monthly, you're going to probably go with the one you chose. So I think you made the right choice, Kay. I think you made a good choice. I think it's the deal. But yeah, TLTW is a pretty darn good performer. But once again, it's because interest rates are going down, and people have been anticipating that interest rates would go down for a while. So I think that's part of the thing. Okay, Max, what did you say the Biggie ETF was going? I heard on the Wolf Financial Spaces, Mike Coe said we have a big announcement coming up because Biggie's turning a year old. And I thought, or Big Y, whatever, I thought that Big Y, I thought the announcement would be that they're going weekly, but they haven't made that announcement yet. So I was just trying to guess what the announcement was. But that's my guess. Surely they're going to go weekly because they're always griping because no one buys it. Everyone tells them to fix NAV erosion, and there's really no fix for NAV erosion other than to pay a lower yield. They bring out a product that pays a lower yield, no NAV erosion, and it beats all the other competing products, and then no one buys it. Part of the reason no one's buying it is because it's monthly. No one wants a monthly fund. Anyway, let's look at Big Y really quick. But I guess people like SPY-I and Triple QI, and those pay monthly. I mean, and look, Big Y's just spanking SPY-I, and everyone thinks SPY-I doesn't have erosion and it's the best fund ever. And it's a good fund. I mean, but it's, but Big Y is, Big Y is an incredible fund. And this is a good apples to apples comparison because they pay, or actually, how much? Oh yeah, SPY-I. It looks like SPY-I just pays. What kind of yield does SPY-I pay? It looks like Big Y pays a lot more yield. Just looking at this sample. Oh no, I'm sorry, I misread it. They said they pay the same yield. They're both about 12%. Okay, so the yield's the other big factor. The yield and what the underline is the two big factors. So these have the same yield and the same underline. So we could compare these two, and it's a pretty good indication of which one's the better fund. And Big Y is spanking it. You want to see something else? Look at this one. GPTY is also spanking SPY-I. But GPTY pays a 30% yield and SPY-I pays a 12%. So GPTY gives you more yield, more total return, but a little bit less safety, or because GPTY was down more during the pullback, but it does give you more yield and more total return, but less safety, to be fair. All right. But anyway, I guess maybe I was wrong about that, but they kept teasing a big announcement that Big Y was going to have. So they said they couldn't tell us yet, but surely they're going to make that weekly, because that I guarantee you that's a big. There's two reasons no one buys it. It's because it only pays 12%, and it's monthly. Yeah, it only has 14 million under management. And it beats. It's not only that. Everyone else thinks. People also think that T-SPY is the answer. T-SPY has no erosion. I think Big Y spanks it also. Yep. And T-SPY is a good fund, but that just shows you how good Big Y is. But the thing is, people just don't buy Yield Max. And so but they're missing out. There's some good Yield Max funds, some really good Yield Max funds. All right. So RH doesn't allow fractional shares. I didn't know that. Roundhill doesn't allow fractional shares. Or Robinhood, I'm sorry, Robinhood. Okay, yeah. Yeah, that sucks. Fractional shares are sure a nice convenience. On the other hand, it kind of bothers me on fractional shares, though, because I have like 30 positions, but most of them are just fractional shares. Because you can never get rid of them, But yeah, I think if Big Y and SOXY went weekly, that would be huge. The other thing I thought maybe they might do with Big Y is change it from a 12% payer to make it part of the 25% target. There's these new 25% target funds out. Throw Big Y into the 25% target. That might attract more people. The Wolf Spaces was good. I'm trying to think if you missed if they broke any news, and the only thing they said was ULTY actually had more changes on the way. They just couldn't tell us all of them yet. But they're considering some other stuff they couldn't talk about. But anyway, that they're trying to get that one where people like it again. All right, Clive, you're still having ULTY with 400 or 45,000 shares across 3 accounts. You capture shares and will allocate to other investments. Still have hope. Crazy, eh? Well, depends on what you want out of it. Those shares will never double in price because the underlying would have to be up 200%. But you can have, but those shares do have the ability to go up. I mean, so you just have to know what you own. But ULTY, let's check it out, and let's take off. We're going to take off dividends. We're going to look at it the way all the other brokers show it, which isn't really fair. But I'm trying to. I mean, this isn't a great way to look at it, but I'm trying to make a point. So, oh yeah, let's overlay. Let's put this one's really more closely related to Bitcoin than anything else. So we're going to put HODL on it down here at the bottom. Okay, so it just so we had a market where Bitcoin went from, and we're going to use HODL for the proxy for Bitcoin, but went from 22 to 30. It's the same proportion. I mean, so Bitcoin went up 50%. And this is when people fell in love with ULTY. They're like, oh my gosh, if the NAV could just stay stable. The NAV was only stable because Bitcoin was up, look at here. And then ULTY made another high, but by here, Bitcoin was up $13 on something that costs 20. That's 50%, and that's just like in 3 months. I mean, that's just a face ripping rally. So that's the only reason the NAV was steady. But that can happen again. Next time Bitcoin does the same thing, it's just math. Next time Bitcoin if Bitcoin would do the same thing again, we could, this thing could go from, it went from 524 to 640. So it was up $1.20, about 25%. The NAV went up 25% in ULTY. And that's without including dividend. For people that want NAV stability, that's what it takes to get a 25% up move in ULTY. You need Bitcoin to be up about 50%, or actually, no, more like 75%. So something like that. It's not that it can't happen, but that's what it does. If ULTY shows improvements, well, I don't think the NAV is always going to go down and to the right. It might go up for short periods because if you get a rip roaring bull market in the underlying, but I mean, I'll say this though. I say always, based on the way it used to be, if they cut the yield, which is basically what they're doing by putting the safer stocks in there, it changes the dynamics. It changes the math around for sure. So it changes the math around to be sure. You could see back in the old days, even though Bitcoin went up, ULTY went down, but that's when they had an old strategy. They fixed the strategy in October. So from here on, they had a new strategy. But yeah, it's just a bullish bet on Bitcoin. You're retired, so 2026. Oh, awesome. That's awesome. I'm 59 years old myself right now. You would wait until after the split before selling. Yeah. Big Y is sort of a monthly version of Chippy. No, Soxy is a monthly version of Chippy, right? Yeah, that's what it is. Because Soxy invests in semiconductor stocks and Chippy invests in semiconductor stocks. Big Y is, yeah, exactly. I got you. That's exactly right. Soxy is a monthly version of Chippy, and people love Chippy. But yeah, I don't think other than that, there were some crypto degens on there. There was, but anyway, but they didn't make any news. They talked about ULTY a bunch, and they were teasing some more announcements coming out, but I didn't hear anything about Big Y going weekly. All right, you don't like the drop of share price, but your biggest concern is what you want for income tax, 2026 income tax. I'm just saying, if the anything that pays 80, 70, 90% or whatever, the share price is going to drop. It's just cooked into the books. I mean, it doesn't mean it'll drop every time, but like I say, people say, well, what about Misty? It went up. Yeah, it went up because Mr. was up 300%. And Misty was able to go up for, a little while. But my rule of thumb is that the fund has to go up at least, the underlying has to go up at least what the yield is. Alti pays an 80% yield. So the underlying has to be up 80% plus at least if you want stable NAV. Because you're actually kind of starting in a hole, or you're playing with a tailwind. Or you're playing with a headwind. Yeah. Hey, Clive, I've heard about this HHIS. Have you heard about those income shares? Look at this thing. Somebody in the comments was asking me about this income shares. Let me try to find it. And I really like this. This income shares was awesome. I just didn't know if you had those in Canada. And what I really liked about lightning spreads, they all these funds, when they just recently changed their prospectus because they were doing covered calls, but they switched on August 4th, and now they're doing where they sell puts and they own the stock at the same time. So it's almost like you get extra upside. It's almost like leverage. I'm surprised that they don't have to say they're leverage, but they use 25% of the money to hold the actual shares. And then with 75 of the money, they sell an in the money put, not even an in the money put spread. They sell an in the money put, and these things pay an insane yield. They pay, these are basically like Granite shares or like Yield Max. Yeah. Look at this thing. The Tesla one pays 73%. NVIDIA pays 57, Amazon 52, Apple pays 34. These are a little bit more than what they pay over here. The Apple ones pay about 25. I mean, Tesla doesn't pay 73, does it? Look at the Coinbase one though. It pays 158. But these lightning spreads are awesome. This is the wave of the future. And speaking of that, look at this. See this prospectus? Defiance lightning spread income. So their lightning spreads are this is the new, better technology than covered calls. But they're coming out with lightning spreads in Oracle, NVIDIA, Palantir, Tesla, Facebook, Coinbase, Circle, Blackstone. I'm excited about that. QLDY is again, speaking of lightning spreads, QLDY is a lightning spread. Okay, so this is your tax deferred account. So you have turned your investments into income. Yeah, okay. Perfect. Because you have a lot of shares. Nothing wrong. That's awesome. I just hope you aren't planning growth out of those. Planning for share growth out of those. But for income or whatever. So you take whatever income you need, and do you put the rest either back into? Do you drip the rest, or do you at least put the rest maybe into a growth stock? As long as you aren't spending it. If you have that many shares and you spend all the money when you get it, the share price could go, but it's probably not going to. So then then of course the problem is the share price goes down, then the dividends get smaller and stuff over time. So I just didn't want you. I love ULTY, but I wouldn't love it if I was trying to live off of it. I drip it all and I just use it as part of a bigger portfolio to bring my average yield up. It yields so much. I have some safe ones too, and I'm just trying to, between the safe ones and the dangerous ones, yield 25% or something on average. So, I look at it as more just kind of like to sweeten the pot or whatever. But yeah, QLDY is a great alternative. Speaking of lightning spreads. So let's talk about that really quick. Let's talk about these diversified divas because QLDY is in this report. But these are four funds that we follow on a daily basis here. I even have a show that I follow these: ULTY, ULTI, K yield, and blocks. But we also follow QLDY. It's right there. But we follow these funds ever since K yield and ULTI came out the last day of October. So this right here is the total return of those four funds plus some other funds that I like. You guys were talking about Chippy. There's Chippy. Chippy's a badass fund. GPTY is a really badass fund. But anyway, so look at this. So total return basically for the month of November. Everything's down because the market's down. Over here on the right, the SPY and the Qs are down too. Everything's down. But look at this. Out of all the high yield funds, this QLDY is down the least, meaning it's up the most. I mean, relative to the other ones, it has the best performance because it's down the least. And it's down 2.95, where the NASDAQ, which is its parent asset, is down 2.35. I mean, that's incredible. I mean, that's incredible that it hangs that close to the parent asset. Anyway, I really like QLDY also. But then we can also look on just a one-day basis, and you could see it was a great day today for Blocks. Blocks does lightning spreads. It was up 4.59%. QLDY does lightning spreads. And the rest of these do standard covered calls and callers, but a caller is a covered call. But yeah, I mean, everyone should do lightning spread. Lightning spread is a better technology. Lightning spread is a better technology. Anyway, I really like this graphic. Not really did, but the gold, you could live off of TDAC or T-SPY if you have enough shares. Yeah. Well, it's the same different. I mean, you know, TDAC and T-SPY also won't go up in every market. If the market goes down, those guys will go down too. I mean, but they don't have as much of a headwind, you know, because T-SPY just pays 14%. So you just need the market to be up at least 14% or more to have somewhat stable NAV. You know, that can happen. You know, that can happen. So you have a higher probability, but the odds of the underlines in Altis basket being up 100% on a consistent basis is, you know, it's a big headwind. Yeah, you like QLDY. Okay. I think QLDY would make a much better one to try to live off of, or TDAC or T-SPY or whatever. But what you're doing with Alti, if you just take what you need and then you just drip the rest back into ULTY so you keep your share count. Because if you drip the rest back in, even though the price is going to go down, you're buying more shares as it goes down. So, you know, maybe you can live off of, you know, 10% of the payment. It's 450 shares, 45,000 shares is a lot of, I mean, it's a lot of shares, but if you needed like 10 or 20% to live off of, that's fine. Take that, pay your bills with it. Use the other 80%, put it back into ULTY, and then you'll acquire more shares at a lower price, and it'll keep the amount of the dividends close to the same, more stable. But if you don't want to drip or whatever, it's about the same difference. If you don't want to drip, just get something that pays 12%. And you can live off of all of it. And it's about the same difference as living off a portion of Altis and having to drip the rest. You sold all your Bitcoin to buy. There's a Cookie Monster. Hey, what's up, Cookie Monster? I hope you sold Bitcoin before it went down. I mean, Bitcoin's been a mess lately. Let's go look at the market. Bitcoin trades 24 hours, so we should be able to see what it's doing. Surely like this bounce we've had lately. We had a V bottom down here. Yeah, look, Bitcoin's up at 91 now. Kick ass. Kick ass. Hopefully it keeps going up all weekend long. And if it does, then hopefully on Friday or all week long, today and tomorrow, if it's up, then on Friday, I bet you the SPY and the Qs will also gap up, and we'll finish out the holiday week strong. But well, that's good news. I'm watching this area right here in yellow because it's where sellers have been before. But and sellers were there right there, and sellers were there right there. And even right here, even before it got there, people sold it even when it got close. But maybe all the sell orders are exhausted. We won't know until we get a close on the other side of it. But, this has been bear territory. But if we could get on the other side of it and start trading and turn this resistance into support, maybe we get above it and then come back in and test it, and there's still buyers there. Heck yeah, then I'll turn this back to green. We'll make this green. I don't want to jinx myself though. Let's leave it yellow for now. Yellow means I don't know. It's not. I mean, it was red. I did have it that color, but I mean, it looks like maybe most of the orders are gone. We'll leave it yellow and see what happens. But I think that's good news. It also depends if your account allows partial drip. You use Schwab and it's either all or nothing, but you could turn it off 1 month. Oh, okay. Wonder if I could do that on Tasty. I hadn't thought about that. So how's the cookie index going there? It's its own ETF, huh? The cookie index. I hear the cookie index is pretty highly correlated to the price of cocoa and the price of sugar, right? Or whatever you make cookies with. You need milk. I mean, you need sugar, you need flour. Anyway. Yeah, but QLDY is really impressive. Let's look at it this way. QLDY. And yeah, let's just compare it to the Qs. So, I mean, it sticks right with it. I could put up any other fund, even triple QI or something, in it, even another good fund, TDAC, whatever, and it wouldn't stick as close as this one. Another fund would do a little bit worse on the way up and a little bit better than the underlying on the way down. These lightning spreads work in reverse. They do better on the way up and worse on the way down. It's just kind of an opposite deal. I haven't yet. And if I do get any Bitcoin, I kind of missed the dip. Well, it's still not too late on Bitcoin. I do want to add, I only have 5.6% in Bitcoin right now, and I use BITK, and I've got killed on it. But it's not BITK's fault. I bought it too early. I bought the dip already on Bitcoin. I bought the dip at 101 and thought I was so smart. And I really like BIT. I like Tuttle Capital. This guy does a good job. But I've just got murdered on this thing just because of the market. But this thing's down 22%. Anyway, and I'm in Bitcoin also through having blocks. Blocks and ULTY or especially blocks are very similar to being in Bitcoin because they have so many companies that are in Bitcoin. But let's see, I actually got this thing on, I think I bought this like November 2nd. I just want to see how bad I've done in it. I think I got it like the first week of November. I waited a little while for it to dip. I just didn't wait long enough. Well, it actually went up for a little while. Yeah, but I probably do need to add some crypto. What I'm really interested in getting is some safer stuff. I think the market's kind of high here. I'm really interested in getting some buffer funds. Do any of you guys use buffer funds? Or something like an auto callable bond, like a CAIE or an SBAR or something. Yeah, there's nothing wrong with those. I just like the income funds. Also, I'll do options on IBIT's awesome. It's the SPY of the Bitcoin world. It's awesome. But I was talking about in my income portfolio. But yeah, if I wanted to do it myself, I would go sell put spreads on IBIT. You bought Bitcoin at 118. Yeah. Well, You did buy the dip. It was down from 129. It just dipped further, right? Okay, so Black Mambo, you bought the dip at 81K. That's awesome. How did you know to do that? I thought it was going to 77, 75. I think a lot of people did. And the reason it did go to 77 or 75 is because people like Black Mamba were front running, and you guys are like, no, I'll buy it right now. No, that's awesome. I'm glad for you. Boy, that'd be a good feeling. Congrats. And IBIT, yeah. No, yeah, IBIT too, of course. No, IBIT's awesome. I was talking specifically about my high income portfolio. I like to have exposure to Bitcoin in the high income portfolio, and I get it through BITK and through blocks. But yeah, I know it's not pure Bitcoin. It's a derivative of a derivative. I get that. I know it's not as good as those other ones. Fibonacci's okay. Heck yeah. So, I mean, but those are so subjective. No, that's awesome. So that is awesome. Let's get the daily chart up here. I never know where to go off of. I mean, do you put it from, do you go from this low or do you go from this low? And I mean, I love Fibonacci ratios, or do you go from, but it's, did you buy the 61.8 or which ratio did you use, or the inverse of the 61.8, whatever that one is? I mean, yeah, I love it. I just can't figure out how to use them. I'm not. So you have fib retracement, fib channel, fib time zone, fibs 3. Okay, so fib retracement is the one most people use, but maybe you go like that. You go from there to there. Yeah, and it hit the 61.8. Perfect. There you have it. That's what you did. I just figured it out. I went off this 55 level, but actually it looks like I missed the level a little bit. I was really trying to make it go off of the 49 level. Gosh darn it. This thing is just too sensitive. But whatever the case is, but yeah, boy, it looks great in hindsight. Why didn't I look at that? I mean, it hit that 61.8 just to the T right there to 81 or yeah. Wow. Well, good call. From 50 to the top. Okay. So we just did the same thing, because that's basically, I was looking at this low right here and that was at 50. Yeah. To the top. And then, yeah, perfect. It's called the golden one. Yeah. Now I've followed it and I watch influencers that talk about those, and I'm aware of it. But yeah, no, that's, yeah, perfect. Low is, 52,984. I was just eyeballing it, but yeah, I see this last swing low down here at 50, but yeah, but I actually drew it about 55. Just a lot of people were probably looking at fibs also. And also there's a huge gap down here and there's been support before, and this down, I was thinking 75 to 77. And the fib level is actually, 79 if you draw it that way, but I may have missed one of the things. I mean, I may not have that. Yeah, there it is. Okay. When I actually did it right, it's right on the money there. Heck yeah. What's up, Michael? Michael Anthony's in the house. You're enjoying this live stream as an old guy with a kitchen cat. Thanks, Max. We all want financial freedom. Well, heck yes. So you have a kitchen cat, huh? Or a kitten? A kid? I thought I said kitchen. I'm blind as a bat. Well, I wonder if Jax would like your cat. Now, Jax, the neighbors have a cat, and Jax is a moron around the cat because he's never seen cats, and all he does is chase it. I have another dog, a big boxer, who's a big, mean-looking dog. He has his balls. He never got fixed, but he's super well behaved, and he loves cats. But but Jax acts like Jax acts like a nut. All right. You think Bitcoin will dip again? Yeah, I mean, yeah, the man in a suit saying the trend looks good. Okay. But it could dip on Friday or Monday. Yeah, it could dip at any time. And here's what I'm looking for if it does dip. I'm just hoping it makes a higher low. That's all I'm ever hoping for. But yeah, if it dips and makes a lower low, I think the next level, I think the next level is 75 to 77. Just because of there's prior support there, and there's a huge gap on the chart. Lots of times the gaps on the chart where there's been no volume in the past will turn the trend. We'll stop a fall and turn it back in the direction of the trend. Not always, but I'm just saying this area right here just hasn't been tested that much. That's why there's no volume there. But the idea is that if it does get there, there's probably buyers there. I really think some people that are watching this level were just front run it. They're like, it's close enough. Let's just buy the dip at 82 or 85. It's close enough. And then there was probably lots of guys who are using that fib. Man, that fib level hit perfect. That's good. That's good. Oh yeah, the guy on CNBC 5 minutes before the close. His name is I like him, Mike Santoli. I think he's a smart guy. They all have suits on, but Michael, he's a technical. He does technical stuff. He's not a fundamental guy. Tom Lee was saying last time markets was at this level, tech was overbought before the selling took place. Well, Tom Lee, you got to remember those guys talk their own book. Tom Lee's right a bunch, but he's been wrong plenty of times also. I remember he was saying, oh no, he was saying it was overbought before the selling took place. So he was right on that one. Okay. But I remember he was pumping Bitcoin in 2018 or right before it went into crypto winter. I mean, he's always going to be, he's a perma bull. He's always going to be bullish, but he is right lots of times. He is definitely right lots of the time. I wonder if stock index futures are open right now. Let's check them out. No, well, yep, they're open. So, boy, this is a good look too. I mean, that's all we ever do anymore is V bottom in these markets. It sounds like they never even go back and retest or whatever. I mean, April was a massive V bottom. 2020 was a V bottom. That's all that ever happens. It doesn't seem like they ever give you a second chance to get on board. If you miss the exact bottom, it's gone. If you're waiting for a pullback, it's done. It's gone. So I wonder if we put a Fibonacci on the market. Let's do this. Let's do this. All right. So where's the sweet spot to buy the market at if the sell-off, if we get a sell-off? Looks like 6,000, which is what I would think anyway. Is that the 61.8? I can't really see. No, the 61.8 is actually this one, 5,700. But doesn't sometimes the inverse of the 61.8 work also? But yeah, the 61.8 is the golden pocket. I get it. And that's why it's in green right here. So yeah, if the sell-off continues or gets going again, something like 53 to somewhere down here is where you want to buy it. And right at about 5,700 would be key. Your Wealthsimple does 24/5 trading. That's cool. Were you the one that bought? Somebody was on the afternoon live stream buying physical silver or physical gold or something. Was that you? And the only reason I remember is because I thought it was Wealthsimple or something you were talking. I mean, because I never heard that before. Yeah, you got to be fearless. Those dips full of fear. Exactly. It's like a bus stop. If you missed, you got to wait for the next one. You're right. And that could wonder if you missed April. There's some people that missed April. And you know what I'm saying? But when the next one happens, it won't go back to April's low, but you'll probably get a chance at 57, 58, somewhere around here. But yeah, it'll happen quick. And if you don't get on board, then you have to wait for the next one. Yeah, Fibonacci's are awesome. Let's see if Fibonacci call. Let's see in 2022. Let's see if we would have gone off the 2020 lows. To the 2021 high. See, this is one, the inverse worked, not the 61.8, right? It was or is that the 50%? I can't even see. Yeah, the 38.2 is, I keep saying the inverse. The 38.2 is the inverse of 61.8. Okay, but no, that was wrong. The 50% line worked in 2022. I mean, if measuring off the low, you could also do it though instead of the low. Some people would, some people might measure it off that swing low. And in that case, the 61.8 didn't work. It went all the way to the 78. I like them. When I'm saying they're subjective, I mean, that's all I mean. It depends on where you put it or whatever. But yeah, the 50% pullback worked great in 2022. That one worked great. So let's go off the 2022 low. Hang on. Let's measure it off the 2022 low, and then let's go to the April highs and see if it caught that, or not the March highs. I don't know why this isn't. Let me try to drag it down a little bit. Well, it's just not cooperating. It looks like if I had it in the right place, the 61.8 will be close in for the April pullback. I mean, that's close. Yeah, the 61.8 looked like it was pretty darn close for the April pullback. It's amazing how many times that golden pocket works. You're waiting for Wealthsimple to add silver. I hear you. I hear you. Pay attention to the swing low of swing highs. Do you use Elliott wave? Do you believe in the Elliott wave theory? I mean, I think Elliott wave could be helpful. I mean, or Fibonacci's, I think they could be helpful, but I sometimes I wonder if it's really the actual. I really think that in the grand scheme of things, if somebody did an analysis on Fibonacci's or Elliott wave or whatever, that the strategy makes you buy dips, and buying dips is a good thing to do. I'm not saying that Elliott wave doesn't work or Fibonacci, but I'm saying a lot of people use discipline. And so if you have a system like Fibonacci's or Elliott wave, you have a systematic way to buy pullbacks. And I think that that's a good thing by itself. Okay, so you use Gann boxes and you buy shares and leaps. All right. Now, Gann boxes is something I never got into, but I studied Elliott wave quite a bit. I had a friend that used to trade using Elliott wave, and he got pretty. What about harmonic patterns? You do any of these? Which one is it? Elliott impulse wave, cycle lines, time cycle. Yeah, there's used to be one he did called heart. Yeah, I think it was this one, this XABCD pattern or whatever. Cipher patterns, head and shoulders. Let's see what else we have over here. Long, short bar. What's a ghost feed? I have no idea what a ghost feed is. I've never even heard that. Projection, anchored VWAP, anchored volume pro. Oh, that's cool. I didn't see that they had anchored volume profile on here. So we could like, oh, that's so cool. I didn't know. I have never seen that. I always keep volume profile on here with this thing, this Lux Algo. I really like this. But I didn't see you could have anchored volume profile. That's actually cool. Did you guys know that? I'm a really big believer in volume profile and market profile. That's probably my favorite thing to use. Shark pattern, familiar with the harmonic patterns, not using. Okay. Yeah. The shark pattern is, yeah. And it looks like a bow tie sometimes or something. My friend tried to explain it to me. I never really could figure it out. But yeah, that anchored VWAP is pretty good looking. Now I'm trying to figure out how to get it off of here. Well, I'll figure it out later. Yeah, I like to use. I think volume profile is my favorite one to use. Okay, it was you, Clive, and it was 25 ounces. But somebody said that's more than $100,000 or something in the comments. But 25 ounces of silver is 20. How much does silver cost? 25 ounces of silver isn't more than $100. But 25 ounces of gold would be $100,000 for sure. Because gold's at like 4,000 or 5,000 an ounce. It was silver, right? Maybe I have the whole thing to. Oh, I'm sorry. Here, I didn't see that, Kay. What are your thoughts on tokenization? You know, I'm an old guy, so I don't really understand Bitcoin, stable coins, and I mean I understand the basic stuff, but just enough to be dangerous, you know, and altcoins and stuff. But I'll say this: I think that more liquidity is better, and so competition's good. So once tokenization, it'll go to the blockchain, right? It'll be a different system. It'll be accounted for on the blockchain. So, you know, 24 hours. What I do like about it is it will make Wall Street catch up, just like Wall Street's had to do on Bitcoin. When that happens, Wall Street's going to have to go 24 hours also, you know, and Wall Street's going to have to match the transparency and openness, or if they don't, or the whatever you want to call it. And if they don't, then everyone will just use tokenized stocks instead of regular stocks, and Wall Street will lose business. It forces Wall Street to adopt. That's my favorite thing I like about it. Okay, you bought gold. Okay, perfect. I don't know why I thought it was silver. Anyway, yeah, that's awesome. So Clive, what did you used to do? You used to buy physical gold. In 2000, you had about 10 ounces. You sold half of it for about 100 grand. Just think about these people that bought Bitcoin early and sold it, you know, it probably made a lot of money and sold it in 2017. And they probably made 100 times their initial investment. But, you know, let's look at a long-term Bitcoin chart. One of these is like an all-time history index. So I've never even clicked on it before, but let me put this on logarithmic. It is on logarithmic. Okay. Gosh darn it. I can't even go back that far. Let's put it on weeks. I mean, that's impressive. Look at that. Yeah, think about somebody that bought it in 2010 and sold it in like I said, and did great. You know, you could have sold it in 2017 was the first time I started hearing about it. This This is when I would have got on my radar, right around in this area. And Tom Lee was saying it was going to go up back then, and it went down a lot further first. He was wrong for a long time, but he eventually got it right. Looks like it's kind of flattening out and rolling over, though. It's not as exponential as it used to be, just because it can't be. There's only so much money in the world. I mean, I sure hope Crypto Winter's not here. Last time it went from 60 to 17, basically call it 60 to 20. So it dropped 40 out of 60. So it lost 2/3 of its value. If it does that this time, at 120, it'll go to 60, right? That's no 2/3 of its value. You could split it into 40. It'd go down 80,000. Yeah, it'd go to 60. Is that right? From 120 to lose 2/3 of your value at 120, you would lose 80. 80 minus 120, 40. I'm sorry. What am I talking about? 40 is going to, if it goes to Crypto Winter and the same trends hold true, maybe you could get it at 40. Yeah, I'm looking at that 2017 dip. Okay. Yeah, well, okay. 2017 dip, it went from 17 to 3. So it lost 14 out of 17. That lost more like 80% on that dip. Something like that. How about this dip right here, the 2011 dip? It went from 1,000 to 182. So it lost 85% there. The first bull run, I didn't even know about this one. I didn't know what it was then, but 2011, it went from 31 to 2. Now that was the biggest butt whipping. 31 to 2. That lost about 90% of its value. Something like that. Yeah, that's impressive. It's fun to look at those long-term charts. That was you buying? Sweet. No, that's the time to do it. It was about 14.8. Yeah. I hear you. That's fine. No problem, Clive. No problem. All right, guys. Well, I'm going to get out of here. It's 9:35. We've been going for a while. There's going to be a Max Factor show tomorrow night. What do you guys want to do tomorrow night? It's Thursday. I'm trying to think what we do on Thursdays, or a daily factor, not a Max Factor. The daily factor is based on the Max Factor, but maybe we'll do. I like Bitcoin. Maybe we'll just do all the Bitcoin surrogates, or maybe we'll do. We do closed-end funds on Friday, so it can't be closed-end funds. I also like to check out Q and SPY, but we usually do those on Saturday. So your choice was to invest in VU or gold, so you chose gold and you won. Awesome. Well, VU's a good one also. You did a lot better in gold. You did a lot better in gold. Heck yeah. Hey, Shane, what's up? Look at the net return of a turkey dinner. I'm going to have a turkey dinner tomorrow night. We could probably look at the cost of a turkey. I bet the cost of a turkey dinner, the chart of the cost of a turkey dinner probably looks like this. Food's out of control lately. Gobble, gobble. I'm thankful for this community also. I'm thankful for you guys. We'll figure it out, but I think tomorrow night's going to be Bitcoin Thursday. DeFi Thursday. You guys got me in the mood to talk about DeFi stuff. So yeah, tomorrow night, be here about 8 o'clock and 8 or 9 o'clock, and we'll do the same thing again. If there's any questions that I didn't answer or didn't see, I apologize. I talked about tokenization. Anything I didn't see, get back with me tomorrow. We'll cover it tomorrow. But anyway, all right, guys. Well, have a good Thanksgiving. Yeah, I won't. I'm not going to do a morning show, so we'll probably won't talk again until tomorrow night. All right, well, guys. I appreciate you all for being here, and I hope you have a good day. Who's partying? Chad's partying? Heck yeah. Heck yeah, Chad. Go have a good time. You're in the Garage Club, right? All right. Yeah. Happy Turkey Day, guys. I will talk to you tomorrow.